Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, September 22nd. Just had one trade, which was put on last night, was taken out overnight, where we picked up 13.5 pips. We'll go over that in a second. First, we want to talk about the big news, which was the interest rate decision by the Bank of Japan and by the Fed. So first, the Bank of Japan came out, left interest rates unchanged at a negative 0.1%. They also said they are maintaining their bond buying program. They're increasing their ETF buying program, which is exchange traded funds, so they can be involved in equity markets in Japan and elsewhere around the world. I'm sure they're also buying individual equities like the Swiss National Bank is. And they also unveiled a yield curve control, which means they're going to try to steepen the yield curve by selling long-dated bonds and buying the short-dated bonds. By them saying that, they're kind of saying that, or they're thinking that long-term the economy is going to be picking up. It's just the short-term that needs some help. That's the thinking by the Bank of Japan. So basically, they're increasing their quantitative easing over there in Japan. Let's get to back here in the States with the Fed. The Fed kept rates unchanged. Janet Yellen just punted the ball away. You know, we came into 2016. They were telling us they were going to increase rates or hike rates 5 times throughout the year. Here it is, the September meeting. They haven't increased them. They haven't hiked them once. A lot of people were saying they were going to hike this month. Nope, she punted the ball away, caved. Again, as we've been saying, no economic reason to raise rates. Every economic number that comes out is horrible, except for a handful. Jobs numbers they're giving us are false. Unemployment numbers are false. Real estate's no good, getting worse. Retail sales, no good. Consumer confidence, no good. So there's no economic reason to raise rates. The only reason to raise rates is what we've talked about many, many times in the past. And that's just really to normalize rates, because when you get to a point of extremely low rates, it has an inverse effect on economic conditions and the economy for so many reasons that we've talked about in the past. And the Fed must know it. Janet Yellen and the other Fed members, they must know it, but they don't want to come out and say it. So really what has happened here is they've lost all credibility. It gets worse. They come out with a statement and they said that they see 3 rate hikes between now and 2017. So we came into 2016 saying they were going to hike rates 5 times. Now they're saying between now and the end of 2017, they see that they're going to hike rates 3 times. But at the same time, they cut the GDP potential for the United States down to the lowest level ever on record by the Fed. So when I say they lost all credibility, that's a perfect example. How can you be lowering GDP forecasts for the lowest ever, the lowest forecast the Fed has ever given us on GDP, yet tell us they're going to raise rates 3 times between now and the end of 2017? What do you want to do? Completely stop the economy from any growth that's going on? The little bit of growth that you're forecasting, if you raise rates, you're just going to squash that. So they've lost all credibility whatsoever. Moving on to some other economic news that came out this morning. Existing home sales missed forecast. And then the Fed's National Activity Indicator. So this is a National Activity Indicator from the Fed, is in contraction for the 19th straight month. It's the worst non-recessionary streak in 49 years, because the Fed and the Obama administration won't say that we're in a recession. The worst in 49 years. And that's the Fed's indicator. It's not an indicator made up by so-and-so or whatever. It's their indicator. So when I say they lost all credibility, there's no one out there that could tell me the Fed knows what they're doing. They may know what they're doing, but they're not doing it properly. Let's just put it that way. So let's get to the trade. Again, it was a scalp trade that we were long from in Aussie dollar from 0.76467. We had our stops in place. We threw an offer out there at 0.76602. It got hit overnight, and you can see what it did by 9 o'clock this morning. She ran all the way up to 0.76, call it 75. So, yeah, we left 15 pips on the table, but again, we weren't watching it. So we grabbed 13.5 pips. Not great, but not horrible at all. So that's it. We're going to wrap it up. If any signals come out that are coming your way, we'll be doing a video tomorrow, assuming we get some action tonight, tomorrow morning. Have a great rest of your day.